Word. Okay.
All right, awesome. Happy Sunday. Welcome. Welcome, welcome.
All right,
All
guys,
right.
welcome. So, yeah, I guess we're going over this beginner's guide to technical analysis, right? Um, for this particular session. So, I guess, Henry, you can get started.
All right. What we have is one of our guides for beginner's guide to technical analysis. Um, it's pretty much the starting point, kind of where you'd get with observing a stock and kind of recording its story in a way, because technical analysis is a way of measuring what's happening to a stock. And so you guys might hear certain patterns like cup and handle, or you might hear head and shoulders, or upside down head and shoulders. And so all those patterns, it sounds like stock market astrology, but these things actually have a story. I think another one is bull flag. The flags are pretty
Bull
popular.
flags, wedges, right?
Symmetrical triangle.
Double
and
tops,
s-
double bottoms.
yeah.
These are all what you call Western technical signals, right? Sometimes you might hear like Japanese terms like, harami, right?
Heiken Aishi
Right. How can I
candles.
see, yeah, candles, right? Those are candlestick patterns, right? And sometimes you'll hear like bullish engulfing, bearish engulfing patterns. Bullish, harami, bearish harami, right? Um, three black crows, three black, or three white soldiers. There are many examples of, right? There are Right? There are many examples of these kinds of patterns that you can, that if you know about it, right, you can use it to your advantage, right?
Go to the 1 day on SNDK. Let me just
This is
drop
a
that part
SanDisk.
off.
Now,
Sandisk.
this is one of those companies that has been, really shooting up with the AI boom and now seems to be going down. Now, it could potentially just be a blip and, come back up. That's also possible. But that remains to be seen.
So some basic terms that you might need to know is upward trend. A trend is simply the general direction of a stock price, the way that it's moving. Upward trend, stocks keeps making higher highs and higher lows. So what you'll notice is that it's going up overall. And so notate the angle of that trend. This one here is a 240% gain. So
You can
this is a
also there is a way to on TradingView to to do like to get the angle of the trend, right? uh, s- um, yeah, I think
yeah.
it's called the info line. So if you click on that line, right, you have info line, you have the trend angle, and so forth,
Hold line.
right?
Is that an indicator or is that
Yeah, yeah,
a
no, it's right on the, you see that where you see the cross, right, on the
okay?
upper left side, right below that you
Okay.
have the trend line, right? Yeah. And then see, you have
Oh,
info
info line.
line, you have trend angle, and so
Oh,
forth,
okay.
right? So it will tell
So
you how many bars this trend has lasted for, what is the angle of the trend, right?
oh,
And so
nice.
forth.
So that's an example
Right?
of an uptrend or a downtrend. Let me
Mhm.
think of one. I guess Adobe might be one
Adobe, yes, this is a
downtrend.
good one.
Oh yeah, this one.
So lower lows and lower highs.
Downward trend, lower highs and lower lows. For
Yep.
sideways, it might look like something like this, sideways chop. And
Yes.
currently, our indexes are moving in a sideways chop. You guys
Our
have it
indexes
noticed
tend
in.
to spend quite a lot of time in sideways chops.
Let's see, let me expand this one. I guess overall, if I drew a box this way, and this is this is the general range that our indexes are moving in. So with all the news, all the good news, bad news, inflation down, oil going up, Iran war heating up, this is the general move of the market. And it looks like started since May. So I think what was the old saying, Anon, sell in May and go away.
Mm-hmm.
So that's an old saying that they say that there's not a whole lot of action during the summer months um, in the market. Usually, most of the action is happening near Santa Claus rallies. So here's some of the Santa Claus rallies. Here's one here. This one starting in October. You guys can see that trend that's bouncing off the 50. And then somewhere right around here is when we started getting it was tariff. This was tariff news. This is when tariff news hit the market.
Mm-hmm.
And go back to the stride. So yeah, so then also identify if there's a sideways market. That's, you can tell because it's not making any new highs or new lows. Here's an example of downtrend. This is an example of sideways. And for your support and resistances. So how many of you guys know how to draw support and resistances? If you can, type SNR. If you guys know how to draw support and resistances. Okay, we'll do a quick one. Let's see, let me find a clean chart, one that I haven't drawn on yet. All right, we'll do XPX. I'll clear some of these out. Second. All right, I'm gonna switch to line graph mode, and I'm gonna highlight the main points, main touching points. Resistance. This looks like where we're kind of trading at right now. And look for support. And
Yep.
look for another obvious one here. We'll go
There,
wait.
there. Yeah.
Yeah, that was a strong one.
Mm-hmm.
And then I think that one, since it has a pretty big dip. And then I'll switch it back to candles. So there, support and resistance lines. So think of each of these zones as kind of the defending zones, and each one of these being either a drywall, a brick wall, or a steel wall. And of course, your stronger walls are going to be here, and then some here are going to be kind of drywall or cardboard, I guess you could say. But it's a good way to kind of measure um, where we're going. So if we're trading up here, that would be bullish. If we start trading around here, that would be a bearish stance. It doesn't mean that it's permanently bearish. It just means it's bearish for, I don't know, maybe for the week, maybe for the next 3 days. Um, and then if we happen to crack this area here, it could be bullish for same thing. It could be 1 week, it could be a week and a half. So just because we get to those zones doesn't mean that it's going to change direction entirely, especially when we're in this chop. So yeah, that's a quick way to draw support and resistance lines. Let's see what we have next. Resistance, support 2, support 1. What's a breakout? Breakouts, and we'll identify some of these here. I think I have some in my notes. Let me find it here real quick. I have one from last week. Let me see. The last one was Dell. Okay, this one was almost a breakout. And how can you tell? The way you can tell is you have this 30% increase in a stock here, and then you have this consolidation here, and then you're breaking this resistance lines. But this is an example of a failed breakout. But a breakout setup is going to look something like this. You might see this, some consolidation, and then a breakout. Let me show you a successful breakout. SNDK, this happened a few times in the past. You have the 30% rise, you have the consolidation, you have a candle breaking out of the channel, consolidation, candle breaking out, consolidation, candle breaking out, and then so now this now pretty much the AI companies are starting to cool off. It's like cool off for the summer. But there's other. Let me find some other breakouts. 1 second. I have one from AEHR. I think this one tried to break out. AEHR. Okay, yeah, this one's a failed breakout. Let me see. Let me find one. Hims was one. Okay, this one here. This one we have the consolidation here, and then
Mhm.
this is your breakout candle. But this breakout was short lived, and then it started to fizzle out. But typically, your breakout candle is going to look a lot like this, or your breakout pattern is going to look a lot like this. So when you see this price action, um, I draw it and then save it on your screen. And your next candle that you're looking for is going to look like this. This is going to be your breakout candle. And then this pattern alone, you can trade this pattern for indefinitely. Just trade this one pattern, and that can make your trading life pretty simple. If you did just that.
That's right. Yeah.
Volume. Volume is helpful, and then there's another part of volume that's also helpful, which is the volume moving average.
Mhm.
So make sure you add that. I like to make it orange, so it's pretty much you check it or uncheck it, and then all these settings are the same. This kind of gives you an idea of what's happening in the market. These large candles here are
A
breaking
large volumes, right? Above
above
average.
average, above average.
Yeah.
So just kind of gives a hint here that when you
Yeah.
see
So
this
when they hit support, right, and you start seeing those big, up
above
higher
average,
than average volume, right? You can at least expect it to go up to top Bollinger or to the resistance.
yeah, that makes this wall um, a lot thicker. Put it that way, by identifying these volume spikes here, that these are a lot thicker. So I might want to make these a different color to help me remember that those are some pretty thick walls. Up here, you can see how volume kind of fades out on these resistance levels. So you can see that, hey, things start to kind of fizzle out. People don't want to buy at these levels, but there's a whole lot of buyers. You can see here, people are buying here. Where else were we having this one? A whole lot of people were buying right here. You can see those candles popping out. Some simple technical indicators. Your moving averages. I like to keep it simple, especially when I'm just flipping through charts. This one is the 50 EMA, and this other one is the 200. How to add them? Let me show you real quick. Let me remove them and re-add them for you guys. This one. These are SMAs. Okay, so I'm gonna do simple moving averages just to look for golden crosses and death crosses. And so, how many of you guys know what golden crosses are? Go ahead and type in the chat golden cross if you know what a golden cross is. So I just added these simple moving averages. I want to change 150, and we'll make that red. And then the other one, I'll make it 200. And we'll make that one, I like it as gray. Like that. A little bit brighter gray. Okay, cool. All right, I'm all set up. I'm ready to flip through. All right, so give me tickers, guys. If you guys want me to go over any charts, we can use them as an example here. GC, GC, is that a ticker? Let's see, GC. Oh, is this gold? All right, okay, gold. This looks like a death cross. Let's see when the last time when there was a golden cross on this one. This was way back in December 2023. It looks like this is when, what a good time to buy gold at 1900. Now we're at 4,000. Sheesh, a lot. But yeah, gold is cooling off. Usually people rush here when they're fearful. But when we look at the VIX, there's not a whole lot of fear going on in the VIX. We're below 20 on the VIX, so not a whole lot of fear. But yeah, you'll see this when there's a fear. I think this made the same run as silver. Silver was making that same kind of move. I remember I had a couple buddies that were deep in silver contracts, and I think they were going out to a year or two, but they're not looking so hot anymore. You got Death Cross here on silver too. So precious metals, they sometimes have their time, but right now it doesn't seem like it seems to be right now. Let's see. You have one anon for
Uh,
tickers.
oh, do you check? Are you checking
Mhm.
Microsoft now? Yeah,
Yeah, Microsoft.
yeah,
I like Microsoft a lot, but it's just
yeah.
not setting up. I'm looking
It's
for
not setting
this.
up at the moment,
If I can see this, I'd be
right?
happy.
Visa,
When I see this, it makes me concerned.
right?
So until we can, yeah,
Yeah,
let me look at Visa. Good one, Anand.
Visa, right? Did you
Visa.
already look at
Ooh,
AMD and so AMD, right, has been really shooting up because of the AI hype.
let's do. Okay, hang on one second. Let me clean this chart up real quick. And I want to highlight this part right here. This looks great. This makes me really bullish to what could be coming up next. Let me look at MasterCard real quick. And MasterCard still catching up, not as fast as Visa. Let me see American Express. Is American Express doing the same thing? Oh yeah, it looks like American Express is about to do that. So I'm gonna keep an eye on these ones. With inflation, people are gonna need their credit cards, right? All right. And so the other one you're mentioning, Anon, was AMD.
Yeah,
Okay, so
AMD
AMD.
and yeah.
Wow, this one's hot.
So if you look right, it really shot up, right? But see that sideways motion at the end, right? It has now broken to the downside of that, right? Now, does that mean it's going to keep going down? Not sure. You want to keep an eye on it. That's all,
Yeah, if
right?
you're if you're going long on AMD and it fell out of
Yeah,
the Darvis box here, you should be of concern.
yeah.
Um,
Don't
it
try to do anything with it unless it breaks out of that resistance,
Yeah, for this one,
right? And you can,
this
if you're doing long term, right? Weekly chart.
change that to weekly.
Yeah. You look at the weekly chart,
Okay,
right?
looks like
Yeah.
looks like consolidation still within
So
that
it could just
box.
be a blip here,
Yeah,
right?
yeah,
And if you
yeah.
put in
Still
the 21, right? 21 EMA,
it's a 21. So this is
right?
20. This makes it 21 week
21 weekly
AMA.
EMA, yeah.
Yeah,
So if it goes and hits that and kind of starts to turn around, there is some possibility there too.
yeah, yeah. There's pretty much this stock can do one of two things. It can kind of fall out of the sky. It could break out, or it could do this. It's possible.
All right, where
Like
it's just
meaning
consolidating and just
it could
hitting that resistance over and over.
it can go sideways. Yeah.
All right, it can go sideways.
Of course, if you're trading one or two calls, you want to take your calls here at support. That'd be a good place. And if you're applying puts, you want to put it around this resistance area. I mean, you're not going to get it every time. It's sometimes it might break out against you. So that's something to keep in mind. But generally, trading above the 21, it's more on a bullish stance. Exponential moving averages. So yeah, we just showed you examples of both guys. We had the simple moving average to look for death crosses. I like those because those are a little bit more slower and accurate. Is as far as the longer term time frames, less sensitive. Exponential moving averages is more sensitive. So this is kind of more pricing in for the beginning of time from the first candle all up until now and weighing that in real time. So this one's a lot more quicker, I guess you could say. Relative strength index. So this one, I would say I don't use this a whole lot, but it could be helpful. I think below below 30 is a little bit better signal on a blue chip stock. If RSI is above 70, it doesn't necessarily mean it's time to short it, because stocks tend to be overbought a lot more times, more often than being oversold. So just because a stock is above 70 doesn't mean that it's going to fall out the sky. It could be chugging in that overbought range for quite some time. But below 30 on like a perfectly normal stock or an index SPY or QQQ, that's something to take a second look at, that it could be oversold. Double tops and double bottoms. I like to think of double tops as kind of brick walls for resistance. And if you see candles reach the tops like two or three times, it's likely that it's a strong brick wall. You can keep an eye on that. That could be going in the other direction. Watch your EMAs. Your EMAs are going to tell you a lot. If your EMAs are stacked and you're hitting your head against the ceiling, there's a good chance you're going to break out. But if your EMAs are not stacked, if it's jumbled up, then it's likely that, hey, this might be just some testing of some upper resistance. Double bottoms, the same thing. I think double bottoms on blue chip or Dow Jones stocks can have value. I think I saw something on McDonald's. McDonald's having a double bottom. I know it's hitting 200 pretty soon. Okay, yeah. So we have McDonald's trading below the 200 SMA. That's considered discount. Does this look like a double bottom? Not quite. I would consider here being a double bottom. One, two, and then the stock went up. Are we going to go for a triple bottom? I'm not sure. Let's see. McDonald's been kind of expensive lately. I'm not saving money going there anymore. It's becoming like a luxury burger place. Head and shoulders pattern. And these are some examples here. I probably won't be able to find it right away. But as you can see, you have this head formation, and then you have shoulder A, shoulder B, and then this could be a signal of this is a bearish signal. This looks like prices are coming down, because you have the stock trying for a new high, and then even higher high, and then after that you don't see that second higher high, so it indicates that we could be testing for lower. So Etsy, let's see what this one did. I think we recorded this back in uh April or so. So let's see, what did Etsy do after the head and shoulders. That one's an old chart, so I can see how it did. I would say I think we recorded it in April of this year. April. Trying to measure that one. Let's see. This looks like, let me try to find that exact spot. That was, looks like October of 25 maybe. October. Okay. Yeah, that was here. Shoulder, head, shoulder. It went down for a little bit and then tested further down. So yeah, that was around this time is when we recorded that screenshot for the example. Inverse head shoulder is the exact opposite of a head and shoulders. It's actually bullish. And I think I saw inverse head and shoulders on Visa. Let me double check. I think it's right here. This is hard. It's hard to spot, but I'll try to draw it using the arcs. Oh, I need a tooltip. All right. It's like a shoulder there. Oh, this one looks like a head. And that one looks like a real mini shoulder. All right, I'll clean this up so you guys can see it. Hang on one second. The 21. Let me check out my new SMAs. and you have that kind of baby head and
Mm.
shoulders happening, and then this is your kind of line, and then so yeah. Let me take out one more drawing. Is that it? Okay, yeah. So yeah, this looks good. This looks bullish. This is inverse head and shoulders. Triangle patterns. Here's a few. We have ascending triangle. It has a flat top and rising bottom. And let me see if I can pull some of that up for you guys. I want to look for ascending triangles. So I'm gonna go for screener, and I want only large cap. And I'm gonna look for a technical signal. Or wait, signal. No. Okay, here. Let's look for ones with a wedge up. So this is really cool. It's super powerful. I'm looking for ascending triangles without having to look at them manually. So what I'll do is I'll set those up and I'll look for anything that pops out at me. None of these, I don't recognize any of these. So let's see, Westinghouse, uh, FedEx. That's a good one. What's FedEx doing lately? I know they were under pressure a lot before. Okay, let's see. So it did outline the ascending triangle. It gave me this blue line here and this blue line here. And let me spot the breakout. So we're trading right above that ascending triangle, but we also have that channel upwards, but it's fallen out of that channel. So this is an area of concern. We want to see it going back in that channel before to consider it being a bullish move. Let me look at it using the EMAs. FDX. Actually, I haven't looked at this one in a long time. Hey, Onan, have you looked at UPS or
No,
FedEx in a
UPS
while?
and FedEx, no.
Yeah, right. They just kind of
Right?
fell off the radar pretty much.
Yeah. No,
Yeah, we used to.
I think the problem was inflation, but look at it, right? People are not paying attention to it, and it's like,
Yeah,
look
this
at
was a really
that.
good time.
Yeah.
If you caught this, you'd be a happy camper. Let's see, 195 to 336.
Yep.
So some call
And
options on
even
that would
if
have
you
been nice.
didn't catch it then, right? If you had caught it when the weekly squeeze on SPY was going from red to yellow, right? Which was
Oh,
yeah,
that was April.
April.
Yeah,
Yeah.
April. So
So, that still
market
would have been
mark
good,
yeah, I think Iran war, and then we had market recovery, and then you had
right?
this.
And then and look at 2025, early 2025, right? Same thing.
Oh, for tariffs. Tariffs
Yeah,
was
yeah,
April as
yeah.
well. April. Or let me go
But
here.
even if you didn't weren't able to catch that, right? Even if this one
Yeah,
wasn't so good,
this is tariffs
right?
right here.
Yeah, tariffs,
There it is
right?
there.
Yeah. And then look, it went sideways for a while. So when it goes sideways for a while like that, right? You check the ADX, see if it's orange, check both the daily and weekly squeezes, right? So this one is daily, right? So check the weekly squeeze for a kind of a bird's eye view, right? And then watch for a breakout of the resistance.
Let's see. And you're talking for EDX on the indexes and on?
No, I'm
Oh,
yeah. Well, indexes and the particular company, right? So go back to
okay.
FedEx, right?
Okay.
So you can see, like at the bottom, um, right, like where it was going sideways, right, before it broke
Yeah.
out.
Oh yeah.
Yeah,
I guess right here a little bit. Yeah.
yeah,
Where
right. And then
we
no,
had the
no,
squeeze.
further to the right. See?
Okay,
No,
this
no,
one
no,
here.
no. The other way, the other way.
Oh,
Go. Yeah,
this
yeah, that
entire
one, right?
this
Yeah. See?
consolidation period.
Consolidation. Yeah, yeah. Right. Now look at the weekly on this one, right? Because the daily can be a little choppy, right? But the weekly at that same spot,
Oh, it was
right, is showing.
negative.
See that tight price action there, right? Squeezes
Yeah.
on, right? That's where you say, okay, let me draw support and resistance, and then look for that breakout at that point, right? And then go back to the daily and use the daily to enter to do some precision entry.
Yeah. So yeah, so I'll recap what Anand said is that on the weekly you had this consolidation and you can tell because it was orange, which means chop,
and squeeze was on.
and you have the squeeze here. And
Yeah,
then once you traded outside of that range, and that was your bullish signal. So this would be considered the
yep.
buy zone.
So once it went right out of that area, right? Now again, you want to have targets, right? Because you cannot assume that it's going to go up like that,
Forever, yeah.
forever, right? So what you do is, you do the weekly Bollingers, and then, buy as many contracts as you can afford. It might be one, two, three, or whatever. If it's just one, sell it off at the top, top Bollinger, or um, hold on, or after it goes some amount, right? Like say 100%, sell off like two or three, take your money out, and keep the
Yeah.
last one for your as a runner.
You might have did this if you entered here,
Mhm.
things are going great, and then you're way outside of these Bollinger Bands.
Yep.
Then
And
this
then
is
then
like
at that point, if it
the
does that big candle there, get
yeah,
out.
yeah, this is acting like a rubber band, so it's gonna bring you back into the middle of that range. So if you could ride the Bollinger Bands for
Mm-hmm.
a while, but once you start to get outside, like if you guys notice this gap right here, then this is like you have the rubber band is being stretched pretty far, is a way to think of it. And on the weekly, so I think pretty much after this one would have been me and Anand probably would have took it out right here. This one is just extra.
Yeah, parabolic moves, right? Because that would have really been profitable. So at that point, we would take out and just wait for the next opportunity.
But yeah, so ascending triangles generally bullish. Watch the price action. Look for that breakout candle. Look for big candles, letting you know that there's volume, that there's volatility. Descending is generally bearish. Now, these are not 100% accurate. It just kind of gives you a general kind of a first look at a stock. Is that if it has this pattern, then you can kind of lean that way based off its pattern. Symmetrical triangle, this is a decision point. Both lines are converging. And so when we are looking for breakout trades, as you guys remember the pattern I drew before, those are all symmetrical triangles. And so when it breaks to one side, it's essentially trying to choose a side. So you could take advantage of that move, but stay watchful of that stock because it can go against you. And that would be considered a failed breakout, which happens all the time in the market. So these are sideways. This was looks like a downward descending triangle. This is example of a symmetrical. So in how to take ascending and descending is you want to take calls above here. You want to take puts above here. But watch them. Keep your price targets tight because the market's kind of whippy. It's not as forgiving as before. If you guys might remember, just a couple of months ago, when the market was kind of on easy mode um, during this time here, switching to the daily, and kind of like we got some of that easy mode just recently, and I'll highlight it right here. This was kind of easy mode. And then the ADX was telling you that we're in buy the dip mode down here. This was an easy time, I would say. Anything on the S&P 500 calls generally went up. You could have just picked anything from the S&P 500, you would have been okay. And then you have that 21-day moving average. We're trading above it, bullish. Let me add the 8-day EMA. As you can see, it's generally surfing that 8-day EMA. You could take essentially it took calls all around the 8-day EMA. You would have been okay on SPY during this green ADX. So now, of course, we're in red ADX and now going into chop. So there's not a whole lot to do in here. So it's a good time to kind of catch up on your reading, catch up on your studies, practicing paper trading, practice drawing on your charts. This is a perfect time to do this because there's really essentially nothing to trade at this point, or at least um, easier easier trades. plenty of difficult trades, but the easy ones are just not here right now. Wedge patterns is the same as symmetrical. I mean, as ascending and descending uh, triangles. Here's a cheat sheet here. I can share this guide with you guys. Just type your email address in the chat, and then I'll forward you guys a link to this Google document. And so double tops by puts, double bottoms by calls, head and shoulders. So this is a quick reference guide. You can print this, put this on the side of your monitor to help remind you on your walls. But yeah, just some important reminders about technical analysis. It's a tool. It's not a crystal ball. It's not going to tell you what's happening in the future. It can just kind of give you an idea of how to base your theories and testing. Pattern recognition. What's a good exercise to do, especially when there's no trades, is pick five stocks. Identify what is their trend. Is it an uptrend? Is it downtrend? Is it sideways? Write your notes. Practice drawing your support and resistance lines. And so I think me and Anon used to do this way back when. I think this was maybe might have been 6 or 7 years ago. I think we would have exercises. I mean, we would do 50 charts over a weekend, supports and resistance, and then another weekend we'll do 100. And then after the month passed by, we'll clear them all out and do them all over again, to the point where probably like around 10 stocks you kind of memorize where their brick walls were. So yeah, practice doing it. It's gonna add to your screen time. And it's gonna help you with your confidence in your trading. Uh, and practice with any patterns that you know from this guide. Some other exercises, and then write down what you're gonna do or what you think that's gonna happen. So write down based on the price action what you think will happen next. And so group them up in tens out of 10. How many do you get right? How many do you get wrong? Most traders are gonna get 50-50. Uh, Exercise two, paper trading. Get hooked up with paper trading, whether if
Mhm.
it's through Yahoo Finance or through Charles Schwab. Uh, that Charles Schwab will have you do it on. I think you can do it, either do it on Thinkorswim or you could do it on the Charles Schwab app. I think you can do it both ways. But the Thinkorswim on mobile is a little bit easier to use versus the desktop. So if you're paper trading, try it on the mobile. It's not too bad. You might have to do some YouTube diving to get used to the interface because it's not as easy as Robinhood. Like Robinhood has been pretty easy lately. Every day for 1 week, pick one stock to follow. Record the RSI and the moving averages. Screenshot the chart on each day. So keep that in a log. Keep it in a Word doc, and just kind of make a report about a stock just for 30 days straight. Just watch it, see what it does. And so, five common beginner mistakes, forcing patterns. You know, if you can't draw the pattern very easily, then it's probably not the pattern that you're thinking of. If you're squinting your eyes, if you have to look real hard to look for something that's there, it's probably not. There's probably no trade. And I think the past couple of weeks, everyone's been squinting their eyes looking for trades, and I've been noticing that. Um, I think I've seen some other guys where they kind of just quit. They stop trading for a little bit, and they're just betting on the World Cup. And I'm like, wait a minute, is this a trading forum? Or are they giving World Cup tips? So yeah. So stay busy by practicing and not losing money. Protect your capital. Mistake two, ignoring the trend. Oh, this. So the most common thing that people say is this is the top. This has to be the top, or this is the bottom. This has to be the bottom. IBM can't be this low, or Adobe can't be this low.
Mhm.
And let's see. Let's look at IBM. Yeah, IBM
Adobe, I
can't
think the
can't.
problem was the AI,
Yeah,
the AI boom, right? And they haven't
yeah,
really kept up with that,
yeah. Yeah, that's true. Everything on
right?
Adobe was all manual, and then you have Nano
Mhm.
Banana. Then everything you can create
Now,
anything you
now
want.
here, right? Oracle, look at the ADX, right? So ADX is red and going up, right?
Yeah,
Which means it's pretty severely red.
Yeah. So
right?
that ADX is 37. That's fast. That's like
Right.
going 100. That's like going 120 down the free
Yes,
down a residential.
exactly. Right. So what I would do is wait for it to turn orange. See in the past one, right? If you go left, right, on this, right, you can see previous one orange right there. You can see,
Yeah.
tight price action, then a breakout, and then it went up to whatever 240 to close, maybe 250 there before it started heading down, right? So, and in this situation, right, when you see the red ADX, then it's going down. You can short any moves up to the ATM,
Yeah.
right? If you're so inclined. I myself, I'm not looking to buy puts or short companies and things like that. So I just wait for it to, go back to orange ADX and consolidate, right? Look at the weekly chart. Now, if you look at the weekly chart, right, it should, on that sideways action there, right? Um, right. Yeah, see right there, right? You can see it had one dot, right? So it kind of tightened up a small amount and then blasted off, right?
Mm.
Going up to 250 and things like that, right? So for long term, I like the weekly, right? And looking at
Mm.
tight price actions and breakouts on the weekly chart, especially if there's nothing wrong with the market, these are the ones I like,
Yeah. That
right? Yeah,
squeeze,
that
that weekly
last move
squeeze was.
went up to like 320, right? Before coming back down.
This is another good one. If you guys watch the
Mhm.
8 and 21 on the weekly, that's pretty powerful too.
Remember
Eight.
how I was talking about fading histograms on the squeeze, right? Fading histograms turned on squeeze, basically is
Yeah.
indicating tight price action,
Oh
right? And it
yeah.
can go
Yeah.
either to the upside or
Yeah.
the downside here.
This one's showing upside
Yeah.
where you have the squeeze firing upwards,
Yeah.
and this one's showing your downward squeeze
Hmm.
where it fired downward. So it can go, the
Right.
squeeze can go both ways. So
Yes.
watch the histograms. Practice with these
Yep.
guys.
Sometimes it can blast off, right? Even if
Yeah.
even if it's a downward squeeze, if you see
Yeah.
that, that's why it's support and resistance matter.
Yeah. Second for something here real quick. All right. Um, Ignoring the trend. Yeah, don't try to identify the top or the bottoms. Just look for higher highs and higher lows. That tells you what the current trend is. And then once that changes and you actually see what that is changing, then that's when you make your determination. You don't try to predict. Trading without confirmation, just kind of like how I said before, you want to see the action happen first before you make the move. You're going to react to the reaction. You're not going to try to predict the reaction. No risk management. If you're going in your full portfolio on AMD because you saw it on the news, that's gambling. That's not risk management. Mistake five, overcomplicating things. This means like doing too much research, going on YouTube to find out everything you can about a company, and then um, that might give you too much information. Just take a look at technical analysis and how the market's moving in general. A lot of that can be a lot more helpful than doing too much research. Mistake number six, emotional trading. You lose two, three in a row, and then you oversize on the fourth one. That fourth one is the one that's going to take you out of the market. The market doesn't know that you've lost three times, so it's not going to give you back your money. So be wary of your emotions while trading. So try to record that as you're trading as well. But yeah, that's the end of technical analysis, our free guide for beginners. I'm just going to take a quick overview on some of our programs we have here at OTB. A lot of our our systems focus about 30 minutes a day. We log in every day at market open for 30 minutes to identify trades. Usually average around 2 alerts a day. Weekly is the spread entries, and what daily would be breakouts. And so basically, what the main levels that we have here is the quick start. This is if you're brand new to trading or maybe just a couple of months in. Quick start is a good place to start. If you've been trading for a while and you're just coming back to trading, Clarity Call, we can help you get back on direction and help you get back in the momentum of trading again, since you're getting back on the horse. Accelerator, this is our best selling program. It comes with a free lifetime Discord and it also has alerts. This one is 3 days, 3 Saturdays. You get three systems and you also get the three gems. And it's a me and Anand, and each session is about 2.5 hours, sometimes three. And so I think the last class we went instead of 3 sessions, we went four. So
Yep.
sometimes if we can't recover all the material, then we'll take another day. And then you also get the updates. So
And
any of the
we're going to, do a beginner's class for those who, want to kind of start from the beginning and learn all the, from bottom up.
Yeah, beginners class
Hmm.
is also in the works, just like
Yeah.
Anand mentioned, and it's gonna fall somewhere around right around here. So
Mhm.
keep up to date into the Facebook group. We'll announce all the details there.
Yep.
VIP, this is a 90-day boot camp. Me and Yernan will be your best friend for the next 90 days. Make sure you download all of our knowledge over the past 7 years or so,
Yep.
all crammed in 90 days and neatly packaged. And you get the videos, you get the recordings. And so this one's rare, but I'd say this is probably if you guys are in the beginning areas, go around here. If you've had
Hmm.
screen time, at least 2 3 years, you're gonna really enjoy the accelerator. And so
Yep.
yeah, some of the reviews. These are some of the reviews. Jet Green, just from our last class, I really enjoyed it. Roth, I think Roth has been here since day one. I think he's our first quick start customer. Wanin has been doing pretty good.
Hmm.
I've been seeing his gains, AK him too, and so this is some of our gains. This one's Anand.
Hmm.
He was in an Apple position. He's been selling those since Apple's been doing pretty good. I guess they increased the prices on iPads and everything.
Yeah,
Riva,
Apple just shot up, quite a bit. And so I thought, okay, I'm not pushing my luck on that one anymore.
this one's Riva. Riva's doing real good.
Hmm.
She had some nice hits. This
Hmm.
one on looks like IBM. Are these IBM calls or puts? What did she do on this one? Hmm, maybe it was calls.
I think it was calls.
Because
Yeah.
yeah, because this is 7/6, so earlier
Yeah.
this month.
Mm.
But yeah, yes, Michael's doing real good, and so yeah, see, there's some of the progress of some of our students.
And some of them
Some
come from the gems that we taught.
Yeah, this one, this is Riva. She did this through a market data play.
Hmm.
So yeah, we have some fun stuff, and we're gonna be doing it for a while. We have another group too. We have the spam free experience is over here on
Yep.
school. So make sure you guys get hooked up on our school. We sometimes have classes here. We post articles here so you guys can further your education and take
Yep.
notes. But yeah,
Yeah.
that's
This one's.
what we so that's all that we have for Sunday. We
Yep.
will send the recording to the YouTube channel if you guys want to review it, and
Oh, let
then
me.
stay tuned for next week. We might have a review on a couple of some indicators.
Yes. All right. So let me stop the